Today, we are digging into a massive shift that's happening all around us, the booming business of assisted living. And, this is a story about more than just buildings. It's about a changing population, it's about big, big money, and ultimately, it's about how we're going to care for the people we love.
I mean, think about it. This is a question that millions of families are facing right now, maybe even yours. And it's that very personal, very real question that is fueling a multi-billion-dollar industry that's popped up to provide the answer.
So just how big are we talking? Well, check out this number. By 2050, the U.S. Census Bureau thinks there will be nearly 18 million people in the U.S. over the age of 85. That is just a staggering figure, and it's creating a level of demand for care that, honestly, we have never seen before. This demographic shift is so huge, it actually has a name. It's often called the silver tsunami, and it's pretty much the single biggest reason this whole industry is growing at the incredible pace that it is.
And we're not just talking about some slow and steady growth here. The number of people over 85 is on track to nearly triple by 2050. I mean, that kind of explosive acceleration in demand is something you almost never see in any industry. And that is exactly what's fueling this massive investment boom.
All right, so this huge demand has created a whole industry to meet it. But what exactly do we mean when we talk about assisted living? Let's get a quick snapshot. Okay, this is a really crucial point. These places have changed a lot. They kind of started out as retirement communities for seniors who were still pretty independent. But today, they're taking care of residents who need way more complex care. And that's a trend the CDC has confirmed. This is a fundamental shift in the entire business model.
And when you look at the numbers, wow, they are just staggering. We're talking about almost 34,000 facilities, pulling in over $76 billion in revenue and $14.5 billion in profit. And what's even more telling is the future. It's projected to keep growing at 4.6% a year. So this isn't just a big business, it's a rapidly growing and very, very profitable one.
So you can imagine, for investors, this has been an absolute gold mine. Over the last 5 years, they've seen average annual returns of almost 15%. Now, to put that into perspective, that's a much better return than you'd get from investing in hotels or office buildings or even retail. Why? Well, think about it. The demand is constant, and it doesn't really go up and down with the economy. So with returns like that, you have to ask, how does the money actually work? How do they make it all happen? Let's peel back the layers a bit and get into the financials to see how investors and owners actually value one of these businesses. Welcome to the language of investing in this industry. It's all about valuation multiples. Now, it might look a little complicated, but these are just the formulas investors use to put a price tag on a business, usually based on how much money it makes. Let's just zoom in on one key number here, 3.24x. That's the median multiple of a company's value compared to its seller's discretionary earnings, or SDE. So what's SDE? Just think of it as the total financial benefit the owner gets from the business in a single year. A typical private facility is valued at just over 3 times that amount. It's a really crucial way to measure profitability. Okay, to make it even simpler, here are 2 common rules of thumb people use for a quick valuation. A business might be worth somewhere between 75 and 78% of its yearly sales, or you could value it at 2.7 times its seller's discretionary earnings. They're both just quick calculations that give buyers and sellers a starting point for figuring out a price. So, we've got this demographic tidal wave on one hand and a super profitable industry rushing to meet it on the other. But what's next? What does the future hold? Because it's not all smooth sailing. There are some major challenges and opportunities on the horizon. And this quote, this really frames the entire challenge perfectly. It comes from the CEO of a major aging services organization, LeadingAge, and it's a pretty stark warning. It kind of makes you think, maybe this private market is only booming because our public systems are failing. And here is why that warning is so urgent. Take a look at this. By the year 2040, a full quarter of the U.S. population will be 65 or older. A quarter. That sheer scale is what threatens to completely overwhelm those systems that are already described as crumbling. In response to this, there's a real push for a national plan, something called a Better Aging Infrastructure Plan. It really focuses on 4 key things: helping out middle and lower income folks who can't afford private care, totally overhauling the broken financing system,
supporting the people who actually do the care work, and expanding more affordable options like housing and in-home care.
So the goal here isn't just to put a Band-Aid on an old system. It's to build an entirely new infrastructure, one that's actually designed for a country that is aging as rapidly as ours is.
And all of this leaves us with a really big, critical question. We've seen how a powerful, profitable market is creating solutions, at least for those who can afford them. But with our public infrastructure described as crumbling, and this demographic tsunami about to hit, is a private market-based solution really enough for everyone? That's a question we're all going to have to answer.